let's make some money. See, at the top, let me announce that I now have a Patreon. So the format of my show is going to change a little bit. I can't give everything away because this is information that's routinely sold for about $1,200 for like a 2 or 3 month period. So I have one level on Patreon at this moment, which is $10 a month. I can't give away something that's sold for $100 a month if you spread it over 12 months, which nobody gives you. They only give you maybe like 2 or 3 months. I can't give it away for less than that. This is money that if you use it properly, use this information properly, you can make multiples of the money back. Today we are going to focus on the US dollar. Also, I want to know, making the announcement that I don't post videos every day because sometimes there's really not much to talk about. So when you see a video from me being posted, you need to pay attention to it. Trust that it's not gratuitous. I'm putting the video up because we're at a key moment where we need to pay attention. Right now, we're going to focus on the decline of the dollar that started in year 2000. We're looking at a monthly chart right now. From 2000 to 2011, the dollar declined, and then it rose to a peak around January of 2017. So that's 2 years ago. Since that moment, we've been in a wedge pattern. Now on this monthly chart, it looks like we're about overbought. Overbought is anything above 80. We're at about 79 right now, so we're approaching that. But you see the orange line, that's the fast line in this momentum indicator. This is a stochastic at the bottom, and the stochastic measures momentum. So the momentum is still high, and it gets a little confusing because it's different on every scale. You can see on a weekly chart, you can see it looks like it's got a whole lot of range to go, and this is the one I'm trusting. And then there's a daily chart, and we're above 80. We're at 85. So the way I come to my conclusion is a confluence of things. I'm an Elliott wave trader, and I have a master thesis that I work from, and I stay with that thesis until it's proven incorrect. So there are periods where the market will, if I'm looking on a short-term basis, say on a daily chart, it may throw my thesis into doubt. But until a certain price point is reached, or some clear indication of a reversal is reached, I stay with my thesis. Now we're going to focus. Okay, 2011 we hit this low. Then like I said, in this January 2017 we made a high right here. Then we made a low, and we've been moving in what we call here a pennant. A lot of people get it. We use the word wedge and pennant. It's, you probably end up making that mistake too, going back and forth between the two. But think of like this is technically a pennant. A wedge, they both, you can see it looks like a triangle. A wedge is also a triangle pattern, but the wedge will be pointed down, or like, let's say the low tip of the narrow end of the triangle will be either pointed down or pointed up. But when the triangle is let's say horizontal, even, it's called a pennant. Think of like a sports team pennant that you have on a stick, and you got the name of America's team, the Dallas Cowboys. That would be a pennant. So prices can only move up, down, or sideways, and these sideways movements are called consolidation periods, and they usually take the form of a pennant, or it can be or it can look it can be shaped in such a way that it does not narrow at the edge, and it's just one big rectangular block, and we call that a flag. But what we have here is a pennant pattern. Okay. For more on pennant, you can Google that. So this is basically the way I'm going to proceed with the free stuff. I want the reason I want to give away. I'm struggling here with what to charge for and what to give away for free. This information is so crucial to our people that I want you to have actionable information free. Okay, enough information to allow you to make a decision about what to do with your retirement account, or enough information to talk intelligently with your financial planner. And I'm a technical trader. If you're some financial planners know technical analysis, some of them do not. Some of them that don't know technical analysis will at least have the foresight to purchase that information from a market technician. So that's another thing you want to know when you're picking your financial planner. You want to ask them, do they embrace technical analysis? Do they at least, one, do they practice it? Do they understand it and practice it? And if not, do they at least purchase information from technicians? If they don't answer in a way that makes you feel reassured that they are getting the perspective of a technical analysis practitioner, run. Go get somebody else. Okay? Run. You're going to lose. That's not anyone. I don't care how many degrees they have on their wall. If they don't embrace technical analysis enough to subscribe to a service, if they don't know it themselves, run. Okay? Now, that's that. So what we have here is, like I said, a pennant, and the entire market is looking to see. And had this high here. We tested the line here. I believe we're going to break through this. We're going to keep going higher. Just like on this monthly chart, it's got this little tip up here. Just like I just like to feel better. Let me look at this weekly. Yeah, that makes me feel better. Okay, so that shows we have a significant amount to go. Okay, I'm looking at this high here. We have a pretty good amount to go. It could go a while. So I believe we're going to break out of this resistance. Okay, this line has been serving as resistance, and that's a technical term. We call this resistance, and we call this support. Meaning every time the price call falls to this level, it finds support and bounces off of it. I believe we're going to keep going higher. So that's 1, 2, 3, 4, 5. I'm Elliott Wave Theory Trader. The momentum indicator on the weekly chart at least is backing me up. And even on the monthly chart, you had this orange line tipping north. So that's backing me up. Now, all of Wall Street, all of the computers that are that basically make most of the trades, okay? Computers run a lot of what happens on Wall Street. A lot of trades are signaled because a resistance it has been violated, or support has been violated. So if the price was to drop, we would say that the support failed, or a support failed, because first, there's this diagonal support, then you would have this support for this, lower low here, and then there will be another one for here. So every time the price does something weird to violate a support or a resistance, automated computers with trading software, they fire off trades. If the US dollar breaks this line, this resistance, line of resistance, that software is going to fire off a lot of trades. And what you're going to see is things that are affected by the rising dollar are going to fall. What's affected by the rising dollar? First off, we know interest rates. So you're going to get some interest rate hikes if this thing goes, if it breaks this line. You're also going to get, because let's see, if we break this line and go above this high, you're talking about coming back to a point in time of April of 2017. And if if the interest rate has been rising all this time, the bankers and if the Fed is not going to avoid the opportunity to make money by raising the interest rate, because the dollar is going to be in demand around the world because of this violation of this resistance. So gold will also fall. Okay, so the housing, and back to the interest rate. When the interest rate rises, that's going to make it more difficult for people to qualify for loans. That's going to create negative pressure in the housing market. Okay, and so then that's going to affect your big retailers like Home Depot and Lowe's, and it's just going to snowball throughout the economy. It's going to negatively affect luxury brands, of course, automobiles. Anything requiring a loan is going to suffer when the dollar violates this line, not if. Okay, so we're looking at the weekly, but let me show you why I'm posting it today, because this just happened today. Okay, now it rose up there, but then it fell down, and we're on Monday with a lot of week left. I think we're going on through it. So I just wanted to tip you off to that. Something to look for between now and for the rest of the week, what you should be focusing on. Okay, so that's all I got for now. For people that are interested in joining my Patreon site, I'm going to continue talking about this with some more in-depth technical analysis tools that will help you really be able to act on this information in more of a short-term basis. So the first part of this video was free information for everyone, so that they can just have a perspective of what's going on in the economy as it relates to the value of their home, the state of their retirement account. But for people who want to really learn how to trade and maybe even make a little money at this, the foundational skills that you need can be found on my Patreon site. And right now, like I said, I just started it. I just launched it a couple of days ago. So there's no one there now, but there I will continue this video for the Patreon. So when the people go into the Patreon site, you'll see this particular video, then you'll see a part 2 of this video. So I want to say goodbye to my no, maybe I'll just keep one long video. Let's say goodbye to my free YouTube subscribers. I appreciate you. Take advantage of this information if you can, and try to join my Patreon site if you can do that, because there's a lot of, whenever you have volatility like this, there's an opportunity to lose a lot of money, but there's also a great opportunity to make a tremendous amount of money. So you got to play to win. Peace.